Good afternoon. Welcome to Midcap Radar. I am Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. this Wednesday. Stocks swing from green to red as mixed earnings in global cues muddy the outlook. Realty, FMCG lead gains, while metals, consumer durables, and healthcare drags.
PI Industries perks up as new brands boost growth and volume. Jubilant Foodworks slides as North Pizza business disappoints.
MRF slips as margins take a beating. CF gains, on the other hand, as analysts say commodity tailwinds drive margin recovery.
Bosch gains despite weak margin in the second quarter on positive commentary. The management remains optimistic and says the company sees double-digit growth in FY23.
Sequence Scientific and Pharma slump post-earnings. Sequence suffers a sharp dip in margins, while a loss in the second quarter drags Pharma lower.
All right, those are the top headlines in Midcaps in focus. Earnings coming in thick and fast. We have Solara Active Pharma, which is down around 3.5% right now. For the markets, we have the Bank Nifty, which is outperforming with gains of 0.3%. Mid-cap side of things, however, are not looking so good. So that index is down 0.2%. And advance decline ratio for now is in favor of advances. But Reema, it's been quite range-bound for our markets today. We'll have to see ahead of that big CPI number in the US today what our markets really do during the close.
Looks like it's a wait-and-watch approach right now, but let's straight away get to our Midcap Movers segment. Vivek joins us to take us through the Midcaps moving in trade. Vivek.
Well, good afternoon. Clearly, if you're talking about the markets today, it's clearly a day where financials continue to outperform, especially the smaller size, PSU banks. Now, most of these banks, have a look at PNB. Today up 8%. In the last 4 trading sessions is up almost 16%. Union Bank up 22% in the last 4 trading sessions, and Bank of India has surged over 18% in the last 4 trading sessions. Along with these, you're also seeing some of the mid-sized banks, and also Suryodaya Small Finance Bank today is up on very strong volumes. Now, moving on, when you're talking about some of the stocks today that are seeing very strong volumes, number one, you're talking about Jubilant Ingreva. It will come up on your screen, and also AstraZeneca Pharma. These 2 pharma stocks today moving up on very strong volumes. And Gloucester, keep an eye on this particular stock. No particular news flow. There's been an appointment of a new CEO, but this particular stock is up 67% in the last 30 trading sessions. Now, moving on to some of the losing stocks in today's trading session. Berger Paints, ahead of its results, saw a significant dip on strong volumes today. Nosil and Mass Financial are some of the other stocks that are dragging in today's trading session.
All right, okay, that's a long list. Vivek, thanks a lot for joining us with all those details. Now let's move on and talk about some stocks that are in focus on the back of earnings. Insecticides posted a decent set of revenue growth this time around, but margins, they were under some pressure. So this time around, margins have come in at 11.8% versus 14.5%. But quarter-on-quarter basis, margins have improved. Let's get in Rajesh Agrawal, who's the MD at the company, joining us now. Mr. Agrawal, good afternoon. Thanks a lot for joining us. Well, revenue growth has been really strong for you this time. It is a 31% growth on revenues on a YOY basis. Can you split it up for us? How much of it has come in from volumes and how much has it come in from price hikes?
The average price hike is about 6 to 7%. So the rest is from the volumes actually.
Okay, so around 25% volume growth is what you saw in this particular quarter.
There has been a change in product mix actually. We have launched various new products in past 2 years, and this year also some new products were launched. So all these products are doing pretty good actually, and we are working on our product mix and trying to do the tail cutting of some old generic products and bring in the new generation. And we are getting very good response from the market, and these products are helping us in increasing the sales.
What was the contribution, sir, of the new product? And could you give us a sense of the product launch pipeline?
Okay. These new products are doing pretty good actually. We divided our range into Maharatnas and Focus Maharatnas. From 55% last year, it has grown to 60% plus with the increased revenue. So which means that we are getting pretty good response from these new products, and our pipeline is very, very strong. So we are planning to launch another about 10 plus, more than 10 products in next 7 to 8 months. So there are some products which are waiting for the registration. Some registrations we already have got it actually, and we are waiting for the plans to complete. Actually, our projects at Dahej and Rajasthan Chopanki are in process. So Chopanki project, we have recently announced the completion, and we are starting the technical manufacture, which will facilitate in launching 2 more new products soon. And then Gujarat plant, we are expecting to complete by December. So January also, we'll start launching some more new products.
Okay, so newer products, how much will they add to top line? Because there are two new facilities that you're talking about. What would the initial capacity utilization be? And for the Dahej project as well, what kind of revenues will they add just this year?
If we talk about this year, actually, this year it will be the last quarter, and generally first half is very, very strong for us, and second half is not that strong. But still, the rains are good and there is ample water availability. So we are expecting a good Rabi season, and we expect that we should be able to maintain the similar type of growth what we have achieved in H1. So H1 we have increased by 25%. I believe that more or less we should be able to match this number in the second half also in terms of percentage growth.
Okay.
Okay. Could you give us a sense whether there are further price hikes lined up? You said the price hikes contributed about 6% to your top line in Q2. Going ahead, yeah.
Going ahead, I don't see the price hike because the market scenarios are changing continuously. There were shortages, there were availability issues in the international market, but now I see the international market easing out a little. So I don't expect that there will be further price hikes from here.
Okay, so when you're talking about international markets, what was the export revenue in Q2? And you have spoken about exports doing better for you, but rupee depreciation is something that was positive as well. So what is the outlook on exports for this year? 150 crores doable?
Yes, we had kept the target of 150 crores. We are trying to meet this target, though there are issues because Indian currency has weakened, but also the currency across the world has weakened. And in many countries, particularly Africa and developing countries, they are finding it difficult to get the dollars. So dollar availability is also no issue, and what we are working pretty hard, and we are trying to obtain the order, and I believe that we should be able to reach very near to 150 crores target.
But what was it in the first half, your total export revenue?
I don't have the exact number, but it was little below 50 crores actually.
Below 50
So
crores.
for exports, generally our Q2 is better because this is the peak season for exports.
Sir, in the current quarter, Q3, will there be an impact of the excessive rainfall that we've seen in the month of October? In a lot of states, the withdrawal of monsoon also turned out to be a lot later than what we typically see. Is that going to have an impact in October, November, December quarter?
I don't see a big impact now because that impact was there in the month of October because the crop harvest got delayed and the season got delayed. But as I talked that the reservoirs are full and the soils are also wet, that gives the opportunity for a good bumper Rabi season. So we expect that the sowing in the Rabi season is going to be pretty good and it will be an opportunity for us actually, and that is one reason I expect that the growth to continue in Q3.
Okay, so final question before we let you go. You stick to your guidance of 100 basis points margin expansion and double-digit growth when it comes to revenue. What is the outlook here?
The growth will be in the revenue front will be good. We are trying to work on the margins actually because this year the margins suffered. Two major reasons. One was the international markets because the international markets, the chemicals were in shortage and the availability was an issue due to the containers. And then the currency also impacted a little. So both these impact we have suffered, but we'll be trying to make up in the second half.
Thank you very much, Mr. Agarwal, for joining in. That's Insecticides India for you. Get into a break. Up next, we'll be joined by Lakshman J. Rao, CMD at Moltec Packaging. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. Well, it's time to get the next corporate, which is on our radar. Packaging solutions provider, Moltec Packaging. The company's stock is down over 10% from the highs. But if we look at what the company did in terms of performance this time around, margins saw a decline, while revenue and net profit grew on a year-on-year basis. Lakshman J. Rao, the CMD of the company, is joining us now to discuss the company's outlook and the demand trends as well. Mr. Rao, good afternoon. Thanks a lot for joining us. Well, top-line growth has been 14.5% in the quarter gone by. For the first half, it's 33%. For the quarter, can you split it up for us? What was the volume growth for you? Which particular sector did it come for you? And what is going to be the growth driver in terms of sectors going forward?
Yeah, good afternoon. We have grown at 10.8% volume growth even in the Q2. And overall for the H1, it is a volume growth of 27% over the last H1. And in the segment-wise, our lubricant business has grown by around 27% over the last quarter. Paints are up by 4%, and food and FMCG is up by more than 40%. So as anticipated, our food and FMCG continue to be our growth driver. And in lubricants, it's mainly the conversion to IML and DEF segment opportunities are what is driving the growth in lubricants. So overall, the growth is still at around 13 to 14% in the revenue side, but on the volume front, it is around 11%. But overall, H1, it is around 27%, which gives us the confidence to maintain our estimate of 20% overall volume growth for the entire year.
Okay, so volume guidance for FY23 is 20%. Afternoon, sir. Can you talk about the paint business? You said the paint business growth was subdued at 4%. What led to it? And in the release, you're also saying the paint business will pick up in the second half. What is driving that optimism?
See, the numbers before Diwali tend to be higher, but prolonged monsoon, in my guess, is the reason for the subdued paint demand. But all the paint majors are very confident of that to be recovered in the second half. And we too also think so, because we have created capacities at Mysore and Vizag to cater to Asian Paints' expected increased business. So we are all set and we are waiting for their takeoff. And as you all know that we are also setting up a plant for ABG at Panipat, which will go into production towards the end of 23 calendar year. So that way, paint will continue to grow in our sales in the future too.
So what would be the volume growth in the paints business for the full year? Consolidated is 20%, but can you break it up in terms of lubricants and paints?
For the 6 months period, the paints grew at around 20.75% in the H1. But for this quarter, it is just 4%. So as I told you, monsoon has hit the paint sales probably. That is why, though the overall growth for 6 months is 20.7%, for this particular quarter, it is just 4.1%.
Okay. Mr. Rao, I wanted to speak to you about your label manufacturing capacity as well. It will increase by 2 times by end of Jan 2023. What kind of cost savings will it bring you? And if there are cost savings, what will your EBITDA per kg look like by the end of this year and say in FY24? Right now, it's at 41 rupees per kg.
Yeah. There were 2 things that impacted our label production. One is lack of maintenance spares, because most of our machines are all digital and electronically advanced machines. They need semiconductor-based electronic spares, which are getting delayed in supply from Italy or even from Europe, which is resulted in longer breakdowns than anticipated. And 2 more machines which we ordered, supposed to be delivered in August, are delayed. They are coming in the month of end of November and December, both of them. And that will almost double our printing capacity, label printing capacity, which will be more than adequate to capture the increased demand we expect from January onwards. Because typically all these ice creams, dairy products, food products and FMCG products shoot up in numbers starting from January, February of every year. So we anticipate and keep ready the printing volumes by adding these 2 machines. And the third machine also, we are almost at the final stage of finalization. It is a readily available machine, which is a digital technology never brought in India. And if that machine is added by Jan-Feb, we'll have more than adequate capacities, and the savings will be considerable. For example, in this quarter, the amount spent on label outsourcing, purchasing amount is close to 4 crores, as against 1.9 crores last year. So that means almost 2 crores of additional purchase happened, which can be saved once our capacities are there. That means almost 7 to 8 crores of purchase can be avoided in case we have the in-house capacities, and with a kind of EBITDA of 40 to 50% on it. So it's a considerable saving. It can add at least 1 to 1.5 rupee to the EBITDA.
Okay.
Sir, your hand sanitizer pump business has not taken off. We understand that one of the contracts from a large company got delayed, Wipro, I think, and generally the demand for the product has also moderated with COVID-related worries easing. What's the outlook? And given that you've made investments in this, is it going to hurt the company?
Not at all, because the total revenues, investments made are about 12 to 13 crores, whereas the 10 crores of machinery, land building are all fungible. Already we are using them for our thin wall food packaging, which is growing at 40 to 50% annually over the last few years. So those machines are all put to use. only the molds and assembly machine pertaining to the pump business worth less than 3 crores or around 3 crores are impacted partially because we are using them hardly 15 to 20% of their capacity. And going forward with the Wipro, once it starts, probably their plans are changing and delaying. So as you said, because of the sanitary, COVID reduction and use of sanitation has come down, they are also thinking of going slow. That's why the pump business is impacted, but it has no impact on our investment or wastage of investment because 75% of it is on the plant and machinery, which are fungible, completely fungible with our fast-growing food and FMCG business.
So, Mr. Rao, last question before we let you go. What about your pharma packaging segment? That was going to be the big driver for you as well. When does that start kicking in, and what kind of investments have you made so far? How big is this opportunity for you?
See, time and again, I'm telling that pharma is a very big opportunity. As it is more than 3,000 to 4,000 crores of export opportunity through pharma companies in India. And very few players are there, not even a single listed player is there in this field. And Moltec, with its vast experience in molding and packaging and hygiene management and robotics, is going in a big way. We are investing in the first phase itself around amounts close to 45 to 50 crores by this April, May 23. But it may take few more months for approvals and audits by the pharma companies. Probably by second half of next year, we'll start making commercial supplies. Meanwhile, the IBM capacities will be filled with some of the OTC orders we received for OTC products and also for dairy and other food segments. So that way we'll be partially utilizing the capacities initially. But by the time 23-24, end of 23-24, we'll be strongly set in a pharma packaging containers and caps, which is having a much higher EBITDA and which has a large market opportunity, including cosmetics and food and FMCG. The IBM opportunity is more than 7,000-8,000 crores per annum. So even if we take a small bit of it in next few years, it can be a considerable growth driver for us.
Okay, all right, Mr. Rao, it was a pleasure speaking with you. Thank you so much for joining us, taking us through your business outlook, the nitty-gritties this quarter, and the capex plans as well. Well, that's the word coming in from Moltec Packaging. For now, we'll slip into a short break. We'll get to you earnings fine print for a host of mid-cap stocks that are reacting. Stay tuned.
Welcome back. In our segment Midcap Spotlight, my colleagues Surbhi and Ekta will be joining in, and they're going to be talking about a whole host of stocks that are on our radar on the back of their Q2 numbers. Surbhi, first take it away.
Few companies that are reacting to their Q2 numbers. The first one is Lakshmi Organics. Weak set of numbers there. The revenue is up 7% on a year-on-year basis. The EBITDA is down 8%. The margins have also come in lower at 4% versus 5% same time last year. And PAT is down 38%. Next is NRB Bearings, where the revenues have come in flat at 257 crores. EBITDA is down 36% at 30 crores. Margins have contracted 600 basis points at 12% versus 18% same time last year, and PAT is nearly halved at 13 crores versus 24 crores. Next is Nitin Spinners, again very weak set of numbers. The revenues is down 24%, EBITDA is down 67% at 58 crores. Margins have come in at 12% versus 26% same time last year, and PAT is also down 67% at 29 odd crores. Lastly, BLS International, good set of numbers there. The revenue is up 87% at 357 crores. Margins at 16% versus 15% same time last year, and PAT is also up at 86%. The company has also announced a bonus issue of 1:1.
Okay, Surbhi, thank you so much for that. Big reaction to these earnings. For instance, Nitin Spinners is down 8%. We have NRB Bearings, which is down 15%. BLS International on the flip side is doing well. So that stock is up in trade today. So big reactions that we are seeing to these earnings that Surbhi just spoke about. So thank you for that, Surbhi. But other than that, in the Nifty for now has recovered a tad bit. We have it at those flattish levels, but with some negative bias. And the mid-cap side of things, absolutely flat. A lot of these stocks which are in focus on the back of earnings, and the PSU banking space, that continues to do well.
You know, we keep talking about how Mumbai real estate is doing well, but Godrej Properties numbers this quarter didn't look so good, right? The stock is down 5%.
It was led by the Mumbai market specifically. It has halved on a quarter-on-quarter basis for the company. Interestingly, the company has seen a decline both on a quarter-on-quarter and on a YOY basis for their volumes and for their bookings as well. Their debt has increased as well this time around, and that is something which is not going so well with the company, because so far the companies that have reported numbers, yes, there is a quarter-on-quarter decline, but most of them have seen a YOY increase, be it Oberoi Realty, be it the other markets that have an exposure to the Mumbai market as well. So yes, that's the reason why Godrej Properties has seen a big fall. Their Mumbai bookings have come in at 550 crore rupees versus 1,000 crore rupees on a quarter-on-quarter basis. But of course, we'll get Ekta in a bit as well. Yes, in fact, Ekta is there. She is going to talk about all the mid-cap pharma stocks that are reacting to earnings. Ekta.
Thanks for that. Well, yes, I'll start with Piramal Pharma, which is in focus. They did provide comparable numbers this quarter. So, for example, the revenue was just about higher by around 9% on a year-on-year basis to 1,720 odd crores. Their CDMO business, which is actually the bulk of their business, was up only around 6% on a year-on-year basis. The complex hospital generic business was up around 12% odd year-on-year, and the India consumer healthcare business was up in double digits, up around 18% odd. They have strong brands in their portfolio such as iPill as well as Saridonic Lactocalamine. Now the margins were 13% versus 14%, and they recorded an overall loss of around 37 odd crores. So overall, a sluggish performance, you would have to say. And remember that this was the first quarter that they reported numbers on a standalone basis after being a demerged entity from the financial arm. Sequent Scientific, the revenue was down around 4% odd. Margins were lower on a year-on-year basis, and there was a loss of around 3.75 crores. But the numbers look better on a Q-on-Q basis. For example, the margins were flat at 1%, so there was no improvement sequentially in terms of margins. And there was a loss of 3.75 crores, which was lesser than the loss last quarter of around close to 15 odd crores. The company has also acquired 100% in a particular company, which is India-based, for over 200 odd crores. They will be paying 153 crores in cash and around 65 crores via preferential allotment. So some developments on the M&A front, but overall it was not much of an improvement on a Q-on-Q basis when it came to Sequent Scientific.
Thank you very much for that. Piramal Pharma, by the way, after this 4% fall that we're seeing post numbers, is now trading below the price that it was on the day of the MSCI selling. Remember, on the day of the MSCI selling, the stock had taken a huge beating on very large volumes. It went down to levels of 158, 159. And right now, as we speak, Piramal Pharma is trading even lower than that level. With that, we're out of time on Midcap Radar. Thank you for watching. Your stocks when we return.